Hi everyone, Paul Stewart here from Segmented Solutions again. Welcome to part 3 of our 4-part SSAS Planning Masterclass. In this video we'll cover SSAS funding and investing, including sections on property, both commercial and residential. But don't forget, if you want a free SSAS consultation that'll customise your SSAS planning and save you loads in tax, there's a link in the description below where you can book a free call directly with me. Please make sure you watch all 4 videos before we speak, as this makes the call far more productive and saves us both loads of time. And don't forget to like, share and subscribe so you won't miss out on any of our new videos, such as our QNUPS Masterclass, which will contain a whole raft of amazing tax planning ideas that have saved entrepreneurs like you millions of pounds in corporation tax, capital gains tax and inheritance tax. So here we go with part 3 of 4 of everything you need to know about self-administered pension schemes. Thank you. So now you've got the SSAS established, the most important thing is what would you like to invest in? And we get a lot of questions about property investments, so we're going to cover that in some detail. We're also going to look at shares in connection with the sponsoring employer. The first bit we're going to be talking about is SSAS funding, because without money in the SSAS you can't make any investments. So first of all, the sponsoring employers and also the members can make contributions. Just like any other pension, they're tax deductible, but there are issues in terms of the maximum allowable contribution, and if you overdo contributions then there are tax charges involved, so you have to be very careful with that. However, we'll talk further about a SSAS and how it can be used to make larger contributions. SSAS can also receive SIPP transfers. As we said before, if you've got multiple members and they've each got funds within a SIPP, they can all be pulled together within one SSAS for making property investments. And the SSAS can receive transfers from previous occupational schemes. Again, that can be from all members. However, it's really important to remember you have to take advice. And if you have a defined benefit transfer where the benefits are calculated as a proportion of your salary or a final salary scheme, it's an absolute requirement that advice is needed. And it's one of those areas where we're wanting to make sure we're not giving advice or any hints of advice during these sessions about a SSAS. However, if you have a money purchase transfer, pot of money, for example, in an insurance company, those funds can be transferred without any advice required. So, SSASs, excuse me, they can invest in a wide range of assets. As we've already spoken about before, they can make loans to the sponsoring employer and to others as an investment, where the interest rate is the return on the investment. A SSAS can invest in commercial property but not residential, and we get a lot of questions from people who are investing in commercial but they're planning on doing a conversion. And the important thing to remember is you have to actually remove the property from the SSAS prior to any residential habitation being granted on a conversion. And again, if you are thinking about doing this, that's definitely part of the free consultation, so we can help you achieve that without falling foul of the rules. A SSAS can invest in regulated collective investments such as unit trusts, investment trusts, etc. And one thing to note is if you're investing in a unit or investment trust, if those investment or unit trusts themselves invest in property and it's a genuinely diverse vehicle, then there's no issues with having residential property within those holdings. You can invest in gilts and fixed interest stocks, listed stocks and shares on the market. There's a thing called a trustee investment plan, where it's one platform where you can make decisions on what the investments are. You can also buy land within the SSAS. Now, we're not wanting to give any form of financial advice here, but any of these regulated investments that are being planned within a SSAS do require an IFA to give advice. However, things like loans to sponsoring employers, they are unregulated activities within an unregulated entity, a SSAS, so you don't need a financial advisor to give advice. However, always make sure that you're comfortable and have done your due diligence. Okay, so investments. There are some rules and regulations around what you do within your investments. As I said before, regulated investments do require FCA advice. But more importantly, where there are connected parties, for example, buying a property from the sponsoring employer, need to make sure that everything is on full commercial terms. You can't sell a property on the cheap, is really what I'm trying to say here. The revenue don't like that, and they'll see through that in a second. A SaaS cannot trade, and it's really important that you realise this. You can't actually have the SaaS running a shop, for example. It can invest in the building that the shop runs from, so you've got to remember it's an investment platform where there's no tax on the investment returns, but it's not a trade. So if you're buying land, sometimes people want to buy and sell different parcels of land. That'll be treated as a trade and will trigger a 55% tax charge. So again, it's very worthwhile having a conversation with us about what you're planning within your SaaS to make sure that it's just dealing with investments. Commercial to residential conversions do require careful planning, and don't forget there is a relationship between the sponsoring employer and the SaaS, so there are ways of moving assets from the SaaS into the sponsoring employer such that when residential status is granted on properties they are outside of the SaaS. Don't want to go into too much detail here. That's definitely something that we can cover during a consultation with you. We often get asked about SaaSes buying into companies and buying shares. And a SaaS can invest in unquoted shares in companies. And here are the rules. 5% of the SaaS fund can be used to buy shares in each of the sponsoring employers. So if you've got 3 sponsoring employers, which is perfectly acceptable, that's 3 lots of 5%, that's 15% of the SaaS can be invested into shares of sponsoring employers. And the rule is that the maximum holding is 20% of the SaaS fund can be invested into sponsoring employer shares. This can be 100% of the shares in the company itself, as long as rules 1 and 2 are not breached. So if 5% of the SaaS equals 100% of the entire value of a company, then absolutely no problems with it holding 100% of the shares. And when the shares are sold, there'll be no capital gains tax. The shares must be in a trading company, not an investment company, so it's important that we have a conversation about your plans prior to establishing the SaaS so that there's no hiccups down the line. Okay, a bit more information on property investments. Obviously, we said that SaaS can invest into commercial property. One thing to note is when you're making investments, you have to have the money in the SaaS or the ability to borrow to make those investments. And if you're wanting to make large contributions to the SaaS from the sponsoring employer, please do talk to us because there are multiple ways that that can be achieved. For example, the SaaS may have 4 members, but it may have the potential to have 5 or 6 other members join in the future. And because of that, the company can make a decision to fund for current and future members into an unearmarked part of the SaaS. So there's no personal limit in terms of the contributions. It's down to what is allowable and justifiable for the company. Contributions of up to £500,000 can be made rather than being restricted to the individual contribution limits in the same way as for a SIP. Property and land deals can therefore be done with more money in the pot, and that can be done on properties in the UK or abroad. Examples are shops, hotels, offices and warehouses, but watch out for residential units above shops because that'll fall foul of the not allowed section of investments. Biggest area is a SaaS buying property from the sponsoring employer and charging rent. The rent is a business expense which reduces corporation tax, but the SaaS receives the rent free from tax, so it's building up in a tax-exempt environment, which helps the directors accumulate money for their retirement. Obviously, there's no capital gains and so on. Care homes and student accommodation investments are allowed and they're deemed fully commercial. Obviously, you need to make sure that those are suitable and appropriate investments that you want to get involved in. And where the SaaS pays no tax on rental income and gains, it's really a valuable thing. But on the flip side, you've got to bear in mind lifetime limits. And within a SaaS, if you have 1 member and you're building up a fund in excess of 1.07 million, there are personal issues in terms of lifetime limit, and we do get involved with lifetime limit planning, and that's something, if you are concerned about the size of fund that you're transferring in or the lifetime limit, we can absolutely help you, and you can achieve tax exempt growth and rental income without breaching those limits. Genuinely diverse unit trusts that hold a range of properties are allowed, even if it's mixed use. So, for example, if you went to an insurance company and bought an investment product, and that product invested in property, and 5 of the shops happen to have flats above, that's not going to cause an issue. It's a genuinely diverse investment vehicle. Again, that piece of legislation is very useful when it comes to planning what you do within your SSAS. Everything goes back to, if you want to do things within a SSAS, you've got to have one in the first place. So if you or your business wants to establish your SSAS, don't forget to go to segmentedsolutions.co.uk/SSAS, and all of the steps are there. My phone number is there if you want to talk. You can book yourself a free consultation as well. My name is Paul Stewart, and I hope you've enjoyed this part 3 looking at investments within your SSAS. Part 4 will look at some advanced SSAS planning strategies, and if you wish to get in touch, then my email address is there, my phone number is there, and in the link below you can click and book yourself into my diary for a free tax consultation about how to use your SSAS. Thank you very much for listening, and I look forward to seeing you again in part 4.